Hey everyone. So on today's Mortgage Market Minute, I want to give everyone an overview of how lending works and kind of go back to the basics, like why a lender asks for certain documentation and what they're looking for to close not just a certain type of loan, but any type of loan. So in the finance world, financing a property is risk assessment. It's how likely you are to repay the debt based on how much income you've got, based on how your credit is, how much equity you've got, the property type, the property location, all of that factors in. So the lenders, particularly for home loans, look at basically three major categories on qualifying you. First and foremost is your credit good enough to say that you'll probably pay back the debt? And a credit score is exactly that. It's just an assessment of how often you've paid back your debts in the past and how likely you are to pay back your debts in the future. So that is the first thing that lenders look at, is your credit. Second is, do you have the capacity to repay the debt? In other words, do you make enough income in a very real sense to pay the mortgage plus to pay all your other bills and still be able to buy groceries and food for your family, and support your household? So the lenders all use debt ratios, which is basically, what percentage of your income you use towards the mortgage and towards your other bills as compared to, how much extra income you have left over at the end of the month. And then the third is how much equity or down payment you have in the property. Do you have enough value in the property that if the lender has to foreclose, that they can get their money back out of the deal? And in some loans, like government loans, they require a much lower value in the property. Like VA is 100% financing and FHA is 3.5% down. Why? Because the government guarantees the loan against default, so that if the lender has to foreclose and they lose money, the government will pay them back part of the loss. So in a nutshell, that's how lending works, is it's risk assessment. How likely you are to pay back the debt, and if you don't, how likely the lender is to get their money back. So if you need help navigating this, because it's quite a bit more complex in practicality than what we're talking about, give us a call. We at KPM Mortgage, really, really familiar with the lending world and the parameters of what's going on. In addition, we can forecast how things are going to go based on, the past, and that's what we do. So give us a call, KPM Mortgage. Look forward to talking to you on the next one. Thanks.